Um, today's session we're going to continue from where we stopped in finance configuration. Last week we looked at took my time to explain the concept of general ledger. Please go back to that video. Take your time to listen to it again, and I believe it will help your understanding of this concept. We said last week that ledgers. Let me see if I can pull out the board we used, so it's fresh in our memory. Yes, we talked about the concept of, okay, this is yes, this is it. We talked about the concept of ledgers and the fact that, you know, if you look at, if you've seen, if you've been in an environment where, manual kind of record keeping happens, probably in the past when we didn't have computers to record financial transactions. Ideally, what happens is that when you visit a typical business, they have a ledger, a very big book that has lines and has different ledgers. So I think Mr. Mike can share more, can understand where I'm coming from, because hopefully he was there or he knows more about that. So the idea is that, every, like, for example, a typical small business will have a book, and in that book they will record, their sales. They will record, they still, some people still do it now. They will record their purchases. They will then, then what the accountant will do is to create a create ledgers where they will now start posting these various transactions into manually using a biro and a paper. But the idea is that, for every business transactions in accounting, it goes somewhere within the books, you know, and we call that general ledger. So there are, like I said last time, there are five key areas within the business that transactions must flow into: the assets, the capital, the revenue, the expense, and the liabilities. Everything falls within these five cardinal areas of your finance, you know, transactions, or what we call the concept of double entry. I took my time to explain that last week, so I won't go into details today. But where we're going to continue from is the configuration bit for this task, which is like the part two of the previous session. So we have said that, you know, um, these businesses will have to set up ledgers to do different things for different purpose. So let's say, let me give a typical business scenario. So this our company they started business, and the first thing they did was to introduce what we call capital, or as we call it, some people know it as investment. In the finance world, we know it as equity. So this business case, they started this company and of course introduced capital, let's say 50 million pounds to start this business, right? In fact, they use part of this 50 million to acquire building and um, generating sets. It's just a scenario. So we acquired some assets, which is what we call assets. Building and generating sets were acquired. Also, um, within this time frame, we took a loan from the bank to fund some major imports. Took a loan from bank, which is called a liability, because we must pay back that loan. Then at some point, we made sales from our investments, which is what we call revenue, and we paid salaries. I'm just trying to keep it as simple as possible. which is what we call expense. So this is an example of, how we create GLs, or what leads to us using GLs to manage transactions, because all these activities as a result of business related activities, and you need to understand what activity, the activity, and classify them properly according to whether they are expense, whether they are revenues, whether they are liabilities or not. But in the system, we need to set up this structure, this GL structure, to manage these transactions. So for us to do that, we need to go to SAP. You already know how to find your way around here. So you go to SPRO, go to financial accounting, general ledger accounting, go to master data, and of course, go to general ledger accounts. In our example, these are all called accounts. All called accounts. Now, so you go to your GL account, we go to preparations, which is where we're expected to create our new accounts, and we go to what we call edit chart of accounts list. Now, somebody will ask, what is chart of accounts? Anybody wants to answer that briefly? When you hear what is chart of accounts?
Chart of account is the account that an organization uses to post transactions that are arranged according to the classes of accounts, assets, liabilities, and so on and so on. And each of these have code numbers attached to them.
Yeah, thank you. So the word chart is what is different. So we have the word chart of accounts. So if you see the word chart, it just means a structure. Remember, if you check, if you want to travel, you can chart a course, which shows you where you stop, where you move, and all that. So it's like a structure of all the accounts we will need to run our business. So it's just an enterprise structure or a chart that shows these are all the accounts we'll be needing, and we need to chart those accounts in SAP. So if we go to chart of accounts, we're going to see so in the beginning of that chart, we have to set up a structure, a chart of account structure, and under that structure, we will have the GLs, or the accounts. So in the chart, we start, the highest in the hierarchy of the chart is the chart of accounts. Then under the chart of accounts, you have accounts, or what we call GLs. All these asset, liability, all of them will be under here. All that will be under the chart of accounts. So, and it's also, I've always told you that SAP always has a standard that we all copy from. And that standard chart of accounts in SAP is called INT. So if we select that and copy, you will observe, some structure. So we will change our chart of accounts. Who can remind me of our, okay, just a minute, let me check my company code. Let me check. Yes, so let me go to my config file.
ABC is our company code.
ABCU. So yeah, this is what we're about to do last week. So I'll copy, go to my chart of accounts, set it up, and change this to ABCU. That's my chart of accounts. The maintenance language is English. Remember, my company code is English. Evie, did you reach out to the colleague in Germany, I sent you her details. Did you reach out to her?
Yes, I did. I did.
Okay.
Yeah.
I hope the conversation went well.
Yeah, it was okay. She's a power woman.
Yeah, she is. She is. She is. Okay, so thank you very much. So for consolidation, if we're going to be consolidating chart of accounts, if we have different company codes and we hope to map, we hope to do consolidation at the end of the year, we need to make sure we set up a group chart of accounts that will all align across the entities so that it's easy for us to consolidate. But we're not doing consolidation, so we're not providing a group account. So if you're done with this, click on enter. And our chart of accounts is saved. Then you click on save. Go to own request. I hope this thing is still there. They've not wiped it off. So they must have wiped it. Okay, ABCU. Let me see. I think they wiped it off. Check. I think that error started from somewhere. They must have even wiped it. Are you sure our company code is still there? I don't think we might have to create new company codes. I don't think
But
it's there.
I saw the CTG.
Yeah, those are old ones.
ABTTG.
Okay. Well, let's see.
Let's
Let me create a new one. Hope they didn't delete our company. Because they had to do a hard reset. Okay, so we have created it. We will check. We'll go to global settings and check. So we have created our chart of accounts. Let me go to global settings and check if my company details are still there. So go to financial accounting, global parameters, enter global parameters. And let me check. Okay, so let me go to ABCU. Okay, it's all there. Thank God. Everything is good. Okay, let's continue. So if you want to check for your company details, that's how you would check.
Can you check for my own? Let's see what that is.
It's there, don't worry. If my own is there, yours is there. You can check later anyways. Okay, so let's go back to our general ledger. So we have looked at the master data and we have created a chart of accounts. The next thing we will do, please, you can mute yourself, Mr. Mike. The next thing we will do is to assign company code to chart of accounts. What does that mean? It means that we have created a chart of accounts, but remember, we also have a company code, ABCU. As at this time, there is no link between the chart of accounts and company code. So if we are posting transactions, it won't come here to our company code. So the essence of assigning the company code to the chart of accounts is to create that connection. So I'll click on assign, look for my company code. Can't wait for when you guys will start entering transactions, but we have to finish the configuration. Then our chart of account is also ABCU. And click on enter and save. Say okay. Go back. So we have, we have defined and assigned our chart of accounts. The next thing we're going to do is to define an account group. Now, it's very, very important because remember, what we have just done is to create chart of accounts. We have not given the list of GLs that will be under this chart of accounts. And you do that in the chart of accounts group or in the accounts group. An accounts group is a config setting, that classifies GL master data into different categories and assign number ranges to them. And what it does is to ensure, that data is consistent. There's a structured way our accounts will report in the financial statement, and also in terms of complying with international financial reporting standards. For example, we have to classify these things we procured, this investment, we have to classify it under equity. The building we procured, we have to classify them under assets. So it's very, very important. The only way you can classify them is to create a group where all of them will sit, all of them will stay inside that group. And it's important. So for us to do that, we have to define accounts group. And defining accounts group, you will see there are existing groups here. And it's simple. It's easy because, like we said, we have 5 account structures: assets, liability, equity, income, and expense. But in liabilities, we have different types. In assets, we have different types. But let's see how we're going to do that. To do that, I want to copy from an existing one I have, or you can start from scratch, but this just saves me a lot of time. So the accounts I want to create, I can just pick them. I will create. This one has asset, current and non-current. No, I won't do that. I will do, let me select what I want to create. So I can either copy or just click on new and just start creating new things, which is not bad anyways. But let me see what I can do. So let me select from the standard one. Then I think I need to have about 8 of them. Let me just select, yes, and say copy. Now, in the first one, I will change my chart of accounts. We created a chart of accounts heading, and we called it, chart of accounts we created was ABCU. ABCU. So I have to go back here, call here ABCU, so chart of accounts. Then the first heading I want to have, typically in your chart of accounts, are assets. So we'll have, first I'll have is current assets. We just put a current assets. Then I'll call this current assets. Now go again, ABCU. I'll call this non-current assets. Oh, sorry. Non-current assets. Just classify them properly because that's how they will show in our chart of accounts. Now select this guy. You just click on it and select this one, ABCU. All these liabilities, all these current liabilities. All this ABCU. Again, ABCU. Talk about the number range later. for this non-current liability, non-current liabilities. And I'll call this ABCU. We have expenses. We go again. Let me say, I'll show you us, okay, better classification. We'll say revenue. Let me call this for you. Revenue. Now, it depends on what we want to give as range. For assets, current assets, I'm going to classify them from 1,000 to 1,999. To 1,000 to 1,499. For non-current assets, I'm going to say from 1,500 to 1,999. For liabilities, 2,000 to 2,499. Then for non-current liabilities, 2,500 to 2,52999. For expenses, we normally use, I like using 3,000 for revenue to 3,999. Expenses, I'll use 4,000 to 4,999. I still have to create equity, and yes, I still have to create capital, and of course another account for retained earnings. Yes. So I'm going to click on enter and save and say okay. I'm going to click on new entries, ABCU. I'll call this capital. That's one I guess many people know. So I'll call it capital, equity. And I will say we have had from 5,000 to 5,999. And again, ABCU, and retain earnings. From 6,000 to 6,999. Enter. And I'll save. So I'll go back. So if I search here and say ABCU and enter, all my ABCUs are this. So we have 1, 2, 3, 4, 5, 6, 7, 8. 8 accounts group have been set up. 8 accounts group have been set up, and that's what we're going to be using to do our work. So save. I've saved before, so that's why I said already saved. So I'm going to screenshot this for my record so that I can remember how I charted my account. And I'm going to take it to my Excel workbook. I'm going to paste it here. That into a tiny cell. I'm going to paste it here. So this is my chart of accounts structure. So you see now that in my example, once we create capital, we know it will fall within a range. When we create building assets, it will fall within a range. So you need to have that range at the back of your mind. And even in real life, you need to guide users to make sure they are posting transactions in the right range. So once we have done that, so if the next thing we're going to do is to define retained earnings accounts. So we need to provide a GL that we'll use to track retained earnings. For those who are not finance people, retained earnings from the word you will see it means like a self-explanatory. It means the profit of a business that we did not spend or that is kept aside for future use, something like your savings. So it's part of the earnings or revenue of the business that we did not, we didn't declare for we didn't you know use to settle stakeholders, or use to share, for stakeholders, or share as part of their shares in the business. We didn't use it to invest in operations. We just kept it aside for the rainy day. So we need to define a ledger, an account that will be tracking those monies that we keep aside, those retained earnings that we keep aside when we're not doing business. So execute this and select the chart of accounts. Now, in the retained earnings, we can normally we use an X or a Y just to use as the retained earnings count. What we call it is P&L account statement. P&L statement account type, we use X, which will mean for whatever P&L accounts we set up. Then we need to provide a GL. Remember, we have not created GLs yet, but we have said that retained earnings will start from 6,000. So what I will do is to just go to here. We'll still have to create the account. So let me know when we start creating GLs to create this 6,000. It will tell us 6,000 has not been created, which is fine, but it's a warning. It's not an error. We'll enter, it's okay, then we save. So we have defined the chart of accounts. We have assigned it to the company code. We have defined the accounts group. We have also set up the retained earnings. So we have done some piece of work now in the preparation stage. I think that's the basic thing we need to do here. We can create chart of accounts, but not now. Once we're done with all our designs, I think that's the first task we're going to start doing now. We have to set up CEO first before we start mapping those chart of accounts. Okay. For line item display, it just shows the fields that will be displayed when we create line items for. You see, when they say this table is cross-client, it's important not to think it's fine. We don't need to provide these settings. Then the financial statement version is the TP&L and the balance sheet. That one will come at the end of this class when we have posted some transactions. Profit center will pick up when we go to CEO very soon. So we're not talking about that now. The next thing we'll go to is the business transactions. And the business transactions, we need to do what we call document splitting. And it's a very important exercise. Document splitting is really based on, it's based on a unique assignment for document types. It's used to, as much as possible, split transactions, to enable us split transactions so we can see transactions at different levels within the GL. So one of the points you need to note is that GL accounts need to be classified for document splitting once they are created. So once we create any GL, we need to classify them for document splitting so that when we are running reports, we can see different dimensions of that GL. And document splitting is used to split line items based on the characteristics which we define in the system. So if we have posted transactions at line item level, I don't want to use too much grammar, but when we start posting transactions, we will need to report those transactions in different levels. And the only way you can do that is when you have done your document splitting. And we have to classify the GLs we need to, it's very important for reporting. And also the document splitting function is used to get financial statement correctly for segment reporting. You know, we talked about business areas, we talked about segments. If you want to be able to do segment reporting, you need to be able to classify your GLs for document splitting, so you can split transactions according to different parameters. And you know, with real-time document splitting, balance sheets can be created for entities such as segment. If you don't split your GLs, your TPNL will just be limited to just reporting on company code level. But if you activate document splitting, you can report in business areas, you can report in segment level, and it's also very, very important. And of course, one thing to note for those who are also deep in finance is that IFRS and IAS, have started looking at, because companies now have global entities. The structure of companies is constantly changing, and there is a need to, there's a heightened need for improved quality and and what we call some model financial statements for segment reporting. So people want to see some reporting at segment level, not just at company code level. So it's important that we set up our GLs to be able to respond to that request or that need to see reporting at different levels. So to do that, you go to classify GL for document splitting. It will pick up our chart of accounts, and we say, okay. Now you see nothing has been done here, and if you start posting transactions, you might run into errors. So the first thing we need to do is to say new entries. And remember the account structure we have. So we have to define the same account structure here. But we will not be very as detailed. So we might say, for example, from 1,000. Now, do you know why I'm having 4 digits here? Anybody? Do you know why I have 4 digits? Why not 5? Why not 6? Any
When we were
person?
setting up,
What?
when we were setting up, you stated 4 digits. When we are trying to set up the chart of account.
Chart of accounts. Awesome. That's very good call, Mike. So when we're trying to set up the chart of accounts, which is this first structure we did here, we told the system that our chart of accounts will be 4 digits. And that's why we have 4 digits code, 4-digit numbers. You go in some companies, there are 8, some are 6, some are 4. So just know that if there's any, just know that that's why you're using 4 is because, that setting has been done at configuration, and that's what we call some of our naming conventions. So we'll say from 1,000 to 1,999, we know they're all under assets, although we have current and non-current, but we'll classify them here as under assets. We don't have current and non-current, we just have fixed assets. So we have to just put them there as fixed assets, or we can also classify them as balance sheet accounts. But if you want to be more specific, you can use fixed assets. But most times we want to be more specific, so we can report from 2,000 to 2,999. We classify them under liabilities. So if we don't have liability, we can put them under balance sheet accounts. We don't have liability, so balance sheet account. Again, from 3,000, what did we have? We don't have 3,000. I think we caught this. We don't have 3,000. Where is income? Okay, I left income in my screenshot. Yeah, income is 3,000. 3,000 to 3,999. It's revenue. 4,000 to 4,999 is expense. 5,000 to 5,999 is equity. Equity is not here, so probably put it on the balance sheet. 6,000 to 6,999. Put it on the balance sheet. That's retained earnings. We don't have retained earnings yet, so we put this under balance sheet. So at this point, we have also created the account for document splitting. So we save. And we say, okay. Save. So we go back. So we have done the first document splitting. We can also define document types if you want. So here we have item categories. We will not be doing this. This will probably be sitting within the guys. So we're not defining, but we can. The next we're going to be classifying. We can do classify document types. So you see they're already classified. So we are not doing anything here. These are all standard classifications. Then we can define zero balance clearing accounts, which is very important for fixed asset accounting. It's already done. So we have this as the posting keys. So 001 standard zero balance, 001 for CO. Yeah. Okay. I think that's that. So most of these settings have been done by default. If you check document splitting for general ledger accounting, this has already splitted based on general ledgers, not accounts now. So we have profit center segments. So we talked about segment accounting. So it is very important. They've also splitted, document splitting for segments, and that is what will support our reports. So all this has been done. Just open them and confirm that everything is there. They've all been done by default. Then we also have here activate the general splitting. So if you click on activate document splitting, which is also very important, you might see that it's already done. So you just click on, let me see if okay, we can select this standard. You can say document splitting inheritance. We can have standard, you can use this indicator, so we use this indicator to activate the function for when we have standard accounts, really. But I don't think we need to do that. But if we need to do that, we need to provide a constant, which is check. Yeah, we can do this. We can provide a constant and get that done. But I'm just thinking if this is necessary at this point. So let's leave this for now. We'll just use the inheritance and the document splitting function, and let's save and say okay. So we have activated for document splitting for my company code. Then you can see other splitting methods. Splitting method, document split rule, assign methods. We're not extending any document splitting functionality. So this is just okay for us to get along with our transactions. So this is a very, very important activity that needs to be done. And once you have done this, I think we are ready to start one of the very important tasks we will do before we but let me, because we had some break, I don't want to rush into it, but from next week it's going to be, we're probably going to be a little bit more fast, and we will start our first hands-on exercise by next week, which would be to start creating GLs. So if I go back to that, my SAP train the trainer, let me check if it's here. Yes. No. Okay, let me check. This is it. Okay, yes. So if I go here, the challenge will start from next week. Next week, we'll learn how to create chart of accounts. And then I will give you your first task, which is to create this ledger. So we'll start the challenge from next week. but I need you to be up and doing with your configurations so that you can be part of that session. So I think this is what we need to do. We don't need to make any other changes here. Wow, so thank you very much. We have done something today. The next thing we are going to look at is, mainly we do this, we need to check the next configuration we have, which is APAR. But before I do this, I want us to configure CEO, because that will precede us to start entering transactions. So we'll leave finance for now and move into the controlling module. I would want us to just go for a 5 minutes break, take water. Once we are back, we will look at CEO and use the remaining time we have to complete to do as much as we can for CEO. Thank you. So 5 minutes break just to stretch and come back.